Hello, colleagues. I'm continuing to tackle a mathematical problem related to the Memecoin market. The task itself seems simple: determine a set of variables that can reliably identify new tokens poised for price growth. My research bot already incorporates quite a few of these variables, but they are still not sufficient for pinpoint accuracy. However, they already allow me to find interesting opportunities in the background without constantly monitoring Memescope. Interesting opportunities refer to various combinations of values that filter out unappealing tokens. I've previously discussed these variables and scenarios. At the end of this video, I'll link to that discussion. Just to clarify, since the last video, I've added more scenarios and variables. For example, I introduced the concept of a snapshot. This doesn't store all token data but tracks whether transaction volume or market cap has grown over a certain number of iterations. Today's topic: where you're being scammed and losing money in memecoins. A certain level of experience, observation, and, of course, lost money gives me the right to talk about this. Are all memecoins that go to zero a scam? Every memecoin that crashes to zero is usually labeled as a rug pull or a scam. But in reality, that's not always the case. If the token creator, dev, didn't make any money from launching the token, can we really call them a scammer? Even if they received some dollars for project support, does that automatically make them a scammer? Developing a project requires effort, which deserves some form of capitalization. For instance, I really liked the Einar token. The developer, Einar from Estonia, actively streamed using an AI version of himself.
Say order, I don't care, I'm coming, no. What your daddy said isn't going over.
This AI humorously responded to comments and answered Einar's questions. The creator had even appeared in Netflix films, and he had a solid audience of 20,000 to 30,000 followers. Everything seemed to indicate success: an audience, reputation, technology, yet the token still went to zero within days. Does that make Einar a scammer? I don't think so, even though I lost money on it. What is a rug pull? A true rug pull can be identified by certain price patterns. Some charts look organic, while others are artificially manipulated, making it hard to distinguish a legitimate project from a scam. There are tools, like Trench Radar Scanner, that analyze wallet connections and identify top holders, but unfortunately, they don't provide 100% certainty. Your SOL investment could still disappear in a second. Speaking of Solana, do you think it's worth developing a bot for other blockchains, like BNB? Let me know in the comments. Also, in many cases, losses don't come from the developer rug pulling the token but rather from someone deploying a bot network around it. That's just part of the risk you take. Always do your own research. Hacked Twitter accounts. This is a double-edged sword: you can either profit from it or lose money. Anyone with a large audience can create a token, rug pull it, and later claim, "My Twitter was hacked," deleting their posts. I'm sure there have been thousands of such cases, yet people still trust influencers. Have you still got your Trump token, or have you already sold it? I've come across such tokens before and even managed to make some profit. There are red flags that help identify scams. A Twitter account that was previously only in Chinese suddenly tweets about a token in English. An account that has been inactive for months suddenly launches a token. Often, the community directly asks the account owner if they created the token. But if the account is hacked, what's the point? Some of these tokens even reach market caps of millions before crashing. One of the latest cases was Libra, a token supposedly supported by Argentina's president, in a tweet. The price skyrocketed for an hour before crashing, leaving many buyers stuck at the peak. This event even boosted the entire memecoin market that day. It also sparked discussions about Javier Milei, his past, his circle of influence, and even cultural aspects of Argentina, proving that memecoins can be educational in unexpected ways. One new variable I'd like to add to my bot is analyzing the follower count of the tweet/post mentioning a token. The issue? Twitter's API costs $100 per month, which isn't currently justifiable. Also, API rate limits make it difficult to track influencer mentions effectively. I'll probably discuss this in the next video, so make sure to subscribe. Duplicate tokens. Whenever a new token gains traction, bot owners immediately launch copies of it. This phenomenon is known as narrative trading in the Memecoin space. Sometimes, clones outperform the original token. When searching for a token, you might be served a duplicate instead of the real one. Most streamers manually check token names before buying, but in major market events, even experts struggle to differentiate originals from copies. A common method to verify originality is checking the market cap. The token with the highest market cap is often considered the real one. My bot automatically tags duplicate tokens in its database. However, market cap doesn't always determine the original. Take the pitfalls token as an example. Mark Zuckerberg was seen at Trump's inauguration sitting next to TV host Lauren Sanchez, Jeff Bezos' girlfriend. A developer quickly launched pitfalls 45 minutes before another person launched Zuckerberg. Zuckerberg gained the higher market cap and became the accepted official token. Even in memecoins, money can manipulate community perception. Copy trading. Most crypto exchanges offer copy trading, and I've even profited from it a few times. However, the main issue is latency. You buy after the copy trader at a higher price. You sell after the copy trader at a lower price. If 1,000 people watch a streamer and 50 of them copy their trades, your trade execution can be anywhere from first in line to 50th, depending on how your platform prioritizes orders. That's why some streamers make easy money, they profit directly from their followers. Be cautious about influencer recommendations. Some provide responsible analysis, while others don't care about their audience at all. Look for streamers who trade for fun and don't share their public key for copy trading. Gambling in memecoins. Let's be honest, all crypto is a form of gambling. But some token types and chart patterns create an illusion of predictability, suggesting that prices could rise, or maybe not. Certain tokens follow a consistent launch pattern. For example, if you observe developers who launch tokens at 3 SOL, you'll frequently encounter similar price behaviors. The chart typically shows a steady, step-by-step growth, making it look like a safe bet. However, experienced traders avoid these tokens altogether because they recognize the pattern. I call these charts staircases, and only the token creator knows when the staircase will collapse. I've experimented with them extensively, trying to beat the system manually and even through automated trading, but in the end, it's a losing game. Where have you lost money in memecoins? Share in the comments.